Hello guys, I've spent over £2,000 on buying a particular stock, and I've now raised my total position and stake in this company to over £4,000, and today I'm going to be explaining the reasons why. So I want to talk to you guys about the amazing things that this company is doing for its shareholders and the value it's adding to their investments. And finally, I'll be exploring its current valuation and why I choose now to invest so much of my money into this one particular investment. So to kick it off, the company I bought is an excellent financial and payment processing company that handles millions of transactions on credit and debit cards all over the world. And that company is, of course, Visa. My Visa position before this buy accounted for less than 10% of my portfolio of invested stocks, over £20,000. I have just 9 positions of high quality companies with fast growing free cash flows. Now these companies need to tick quite a few boxes before they can make it into the portfolio, and Visa just seems to tick them all. I've also discussed Visa a few times in previous videos as being fairly valued right now. So I finally pulled the trigger and nearly doubled my position to £4,000. For context, I was buying Visa when it was trading at $228 per share last year, when I first started investing in my taxable account all the way back in 2023. I think it was the third stock I ever owned. So for me to still be buying this one, I just think the company is constantly increasing its intrinsic value and building on what it offers to shareholders. Now let's get on to what Visa does. As previously mentioned, they're a payment processing company that operates worldwide, along with MasterCard offering an established and highly profitable duopoly for both parties. They make money by taking a portion of card transactions that they process. This is called an assessing fee and is the charge levelled against the merchant specifically by Visa and MasterCard for managing the underlying payment network. For perspective, a merchant pays what is called an interchange fee. That includes the assessing fee by Visa or MasterCard. Now this interchange fee could be between 1.5% all the way up to 3% that mostly goes towards the bank that provides the card. As part of this fee, Visa and MasterCard charge just somewhere around 0.15% in the form of the assessment fee. So in reality, Visa aren't taking a massive cut, they're only taking 0.15% of the transaction compared to all the other fees the merchants have to pay. So if we pay £100 to a shop, just 15 pence of that goes to Visa. The reason this is so profitable is because last year in 2023, Visa processed over 266 billion transactions. That's around 720 million per day, adding up to billions in revenue for Visa and MasterCard. Now, when we think about the scalability of this type of business model, that's when things can really sort of ramp up for this company. If we look at specifically the assessment fee and how much they are charging, they're charging 0.15%. Now, what's to stop them raising this to 0.2% or even above that? If they just raised it by 0.5%, it would add about 25% to their profits. But would anyone really notice? Would the merchant, who's already paying considerable number in fees, notice if 0.5% was added? It doesn't really change anything for Visa or MasterCard. They can actually impose the fees that they choose, and that could have massive impacts on their bottom line and very little operation costs. So if we look at the fundamentals of this business, I see nothing but good things, with their revenue growth at 17% CAGR over the past 3 years to $34.1 billion this year. Now they're expanding their network and cards all over the world, and yet they still grow this revenue impressively and consistently. And then we get onto their free cash flow. In the past 3 years, they have an impressive 20% CAGR to $19.7 billion. And that's just impressive when we consider that I'm looking for about a 15% from my companies in free cash flow growth each year. So this business can produce great free cash flow growth because of its impressive margins. They're a business that moves data from one place to another. So the operation costs that they're faced with are not as similar or as high as other companies. So when I ask myself what I'm looking for with a company, I want to see a monopolistic position the likes of which Visa offers. That's growing its revenue over 10%, growing its free cash flow over 15% over the past 5 years, and finally is returning value to shareholders. So what does Visa do for shareholders? Well, they have rapidly growing dividend that is double digits of growth, now sitting at $2.08 per share per year, which is very safe with a low free cash flow payout sitting around 20% that they've maintained for the past 10 years. Then we have their share buybacks. They use free cash flow to buy back around 2% each year, a massive amount of shares that makes the shares we own even more valuable. And this will continue in the future with them buying back around 9.7 million shares in the first 3 months of 2024. With a further $23 billion set aside to do just the same for the rest of this year. This is a company that returns so much value to us as investors that I just feel comfortable having my money in this company. So I extended their weighting to around 16% of my portfolio, overweighing almost every single other stock bar Amazon. But where does this put Visa's valuation? If we look at the free cash flow yield of this company, we see it sits at around about 3.6%. which sits right bang on the average of this company in the past 2 years or so. The story is the same with the price to free cash flow. Historically, this one has traded at an average of 28 times free cash flow, and it's currently sitting at 27. So whilst I don't think it's undervalued, I do think that it's not overvalued. And given the historic metrics that we've taken a look at, like the price to free cash flow and the cash flow yield, I would arguably say it's fairly priced. However, as time goes on, I don't see this company not growing its free cash flow, and therefore its intrinsic value. So that number of fair valuation will probably be very fluid with Visa, as it has proved to be in the past. But thank you very much for watching, guys. I do appreciate it, and I will see you in the next one.